Bitcoin is coming in a little bit on an intraday basis, but really, what do we have here, guys? If you followed my game plans, and I know a lot of you guys watch religiously, and I thank you for your time and dedication. I really do. And that's why I try to teach as much as I do in these things. But we know that this is a bearish pattern of consolidation right now. So you would factor that you eventually break lower. I do have my secondary support here, and then eventually a major support at around 50,000. And again, there'll be points where I start to accumulate Bitcoin. I mean, again, as much as I like gold in the long term, I like Bitcoin in the long term too. Again, a lot of people call me a bear on Bitcoin, but I certainly am not a long-term bear. I'm a trader in the near term, which means I go short a lot and I go long a lot, but I certainly am a long-term bull on Bitcoin. Altcoins, not so much, because again, you just don't know which technology is going to kind of dominate. If you look at 5 years ago, what the top coins were in the top 10, a lot of them are no longer in the top 10. And you just have to understand that it's musical chairs in the altcoins. But Bitcoin, I do see that as the digital gold down the line.
Now, guess who keeps his eye on us? The author of best-selling book Rich Dad, Poor Dad, Robert Kiyosaki. And we want to take this opportunity and thank all the people who trusted us, and we read every comment. And the best part, it's free. Subscribing now means you will get all new information for free. Don't just follow the trends, stay ahead of them. Subscribe to Bitcoin Zealot today and enjoy the new edge. Let's join Gareth in this video about Bitcoin and more.
10-year yield, we had the bear flag. You guys know I've been talking about this bearish pattern. In fact, I've really choreographed this whole move on the 10-year yield. And you can see, again, we were in this wedge pattern. I talked about a likely breakdown coming. We got the breakdown right here. We then rallied, and we call it at the scene of the crime retrace. It's kind of like the person who does the crime likes to go back and take a look at what they did, and then they're like, oh, cool, all right, and then they go running away again. Then we create this bear flag, in spirit of, I should call it a bear flag, and we're starting to come down. We haven't broken it yet, so it's still technically a flag pattern. It's not a breakdown yet, but that looks to me, based on probabilities, and again, I'm just using 25 years of technical analysis knowledge, that you should break lower on the 10-year. And really, to be honest, I'm starting to be in the camp that we could be in for deflation if the economy continues to go down like it looks like it is. When you look at things like nickel and you see these type of drops, let me bring up the nickel chart here. We'll go to the perpetual contract here. When you see drops like this on nickel and you see copper down as well, if we look at copper here, the drop on copper, it's getting a little bounce today, but looking at these 15%, this 15% drop on copper, yeah, oil's still hanging in there like I talked about before. It's probably because of the short unwinding of bigger institutional hedge funds. But at some point, the U.S. economy, especially if what Nike's saying is true, we're going to start to see China not recover, and then the U.S. slow even more. Oil's eventually going to fall, and I do think that you might be talking about deflation. Now, deflation sounds really good to all of us out there because it's like, oh, prices will come down instead of, and remember, even though inflation is back to basically like 2.6% per the PCE, remember, that's still every year 2.6% increase in prices that you're paying at every place you go, basically. So deflation sounds great. Oh, man, you mean like a carton of ice cream or whatever is going to go down in money, right? It'll be less. That's good, but my issue with that is this, is that ultimately, what does that mean? It means that the Federal Reserve and the U.S. government will feel like they have the authority now, because it's deflation, to print even more money. And that's what scares me, because if you game this out, and I always look at myself as being a chess player, right? I do play a little chess, but I'm not that great. But when you're trading and investing, you trade on what's happening now, and you look at what is potentially going to happen 5 steps away, right? You have to game out what the next potential scenarios are. So I was in the camp that we'd come to 3%, we kind of stall there, and then that would freak everyone out a little bit. We went through that phase. Now I'm in the camp that if the stock market falls, that's going to really hurt. I mean, if consumers are already hurting, so basically the bottom 60% are already hurting, those that don't have investments or a lot of investments. If you get the stock market to fall because the U.S. economy starts to fall, then you hurt essentially the consumer spending all across the board. That spirals demand for goods. We see obviously slowing economies hurt nickel and iron ore and all these other things. And you have a recipe for deflation. But the negative of that is that all of a sudden it gives free rein to the government to say, oh, well, listen, we can now spend even more money because it's deflation, right? We have to spend our way out of this recession, this really bad recession we're in. U.S. debt goes exponentially higher. Let's say it's at $50 trillion instead of $35 trillion. Then you have the Federal Reserve saying, hey, we got to get us out of deflation in this recession too. So now let's drop interest rates back to, let's say, 3 or 2%, and let's raise our balance sheet by another $7 to $10 trillion. And what it does is it then, if you game it out, it now puts us in a situation where we literally could be looking at hyperinflation 10 years from now. And that's my fear. My fear is not deflate. I mean, to be honest, I think the mandate for the Fed should be zero inflation. Just keep prices stable. Just keep freaking prices stable for people. Then you're not hurting the poor. Obviously the rich can handle inflation, but it's really the lower incomes that get hurt by inflation, and that's what's been going on.
Renowned author Robert Kiyosaki continues to invest in Bitcoin, viewing it as a rules-based money compared to government fiat. He emphasizes Bitcoin's potential to increase wealth and critiques Bitcoin ETF as fake. Robert Kiyosaki purchased 60 Bitcoins at $6,000 each, driven by the encouragement of Raoul Pal, a former Goldman Sachs executive. Today, these Bitcoins are valued at around $60,000. Kiyosaki is committed to expanding his Bitcoin holdings every month. His investment philosophy is rooted in the belief that Bitcoin, as rules-based money, is a sound way to increase wealth. Kiyosaki emphasizes the distinction between Bitcoin and government fiat money. He describes fiat money as debt-based, which he argues diminishes wealth, whereas Bitcoin's rules-based nature promotes wealth growth. Kiyosaki referenced the banana zone, a term by Raoul Pal, which describes a significant rise in Bitcoin's value. This phase creates reactions of regret for not buying more Bitcoin earlier. Kiyosaki strongly criticizes them, labeling them fake. He extends this critique to all ETF, including those for gold and silver, arguing that they do not provide the same security and value as owning the actual assets. Kiyosaki believes that real assets, such as physical gold, silver, and Bitcoin, offer true value and security. He stresses that ETF can be manipulated and diluted, failing to offer the protection that real assets do. Following Warren Buffett's strategy, Kiyosaki waits for Bitcoin prices to drop before buying more. He predicts Bitcoin will hit $350,000 by August and consistently urges investors to buy and move away from the US dollar.
Notice again, this is what I mean by the soft kind of intervention. It does make me think, just because of the way the dollar yen is acting up here, is that we might have a scenario that maybe they're just kind of coming in and trying to keep the dollar yen right in this range versus letting it explode to the upside. Because really, this was a pretty impressive breakout. Now, granted, it could be making a bull flag for another move up. We'll have to watch it into next week. But ultimately, I've said this before, that even though the U.S. has warned Japan not to intervene, it's very unlikely that Japan will just be like, oh, well, who cares? Let's let our currency crash, right? No country's going to do that. Like, they're just not going to do that. So at some point, they have to intervene if things get bad enough, because ultimately, if not, then they're in a whole heap of trouble over there economically as well. We're already seeing that quite a bit. Now, like, you could easily say that Japan has made their bed and they have to lay in it, right? Because they do have 250% debt to GDP, which makes the U.S. look like a standing star, like the North Star of fiscal responsibility, which it obviously is not. But again, it's just showing, in my opinion, it's showing us what likely will happen to the U.S. if we continue on this pace, which is, again, eventually the dollar continues to lose buying power and value. And at some point, there will be de-dollarization, right? I mean, it may be, it's a long process, but we know historically that reserve currencies usually have about 100-year shelf life. U.S. is coming up on that, obviously, as time goes on here. So that's another thing to keep an eye. Speaking of dollar yen, we're down ticking a little bit as we speak here.
A dormant Bitcoin whale reactivated, transferring $61.55 million worth of Bitcoin to Coinbase. This significant move follows other notable transactions, reflecting ongoing activity in large Bitcoin wallets. A long-dormant Bitcoin wallet, inactive for 6 years, transferred 1,000 BTC, $61.55 million, to Coinbase Prime. This transfer highlights significant movement within large Bitcoin wallets. Earlier this week, the U.S. government moved approximately $241 million worth of Bitcoin to Coinbase on June 26. Despite community concerns, this transfer did not trigger a notable price change. On July 27, $3 million worth of Bitcoin mined in 2010 was transferred to Binance. These coins originated from the early days of Bitcoin, when mining could be done with a personal computer. Currently, Bitcoin is trading at $61,522, having peaked at $62,314. The cryptocurrency is down nearly 5% over the past week and is struggling to regain bullish momentum after a recent price crash. Despite the price struggles, inflows into large Bitcoin wallets have increased. Exchange-traded funds, ETF, for Bitcoin are seeing inflows, which may provide support to bullish investors. If you've been with us so far, a big thank you. Don't forget to subscribe for free to Bitcoin Zella for your daily news. The link is waiting below. That's all for today's crypto news. Stick around for more updates, insights, and analysis on cryptocurrencies. Share your thoughts in the comments, like this video, and subscribe for more exciting content.